In this video, I'm going to share 3 bad money habits that keep you poor and stop you from growing your wealth. I think these 3 habits are fairly common, but no one actually teaches you not to do them. If you're new to this channel, I'm Matt. I've been a finance consultant for over 10 years. I've worked for one of the top consulting companies in London. I now run my own company, and on this channel, I talk all things personal finance. So let's get going with the video. The first one is thinking of income as only coming from one job. I grew up always thinking that you should work hard in your one job, try to get promoted and earn a bigger salary. And I think a lot of us are brought up in a similar way. But the big difference between those who are earning a low or average income and those who are earning millions or more is that they have multiple sources of income. In fact, a study showed that 65% of millionaires have at least 3 sources of income. These can be from a variety of sources, from real estate being rented out, earning dividends from stocks and shares, or earning income from businesses that they own. By spending time on adding passive income streams, I found my income exponentially grew. And as you earn more income, you're able to invest in new sources and create more income, and your wealth keeps growing and multiplying. There are lots of videos on YouTube and online giving ideas of different types of passive income streams you could start up from scratch. And many of these you don't need lots of startup money to get going with yourself. For example, it could be that you teach a short course online about video editing, and you can do this on platforms such as Udemy. The second habit is on how you manage your income and expenses and stopping the cycle of lifestyle inflation. As you earn more money, you spend more money. In London, in the city, I would always see people earning more and more money, getting promoted, increasing their income, but then spending it all on fancy new cars, designer clothes, or expensive meals out. If you can do your best to try and keep your expenses at a similar level or within your means while your income goes up, you'll find you're able to grow your wealth at a much faster rate. There's a great book called Rich Dad Poor Dad by Robert Kiyosaki, which talks about the concept of paying yourself first, which is what rich people do. And what this means is, instead of having the mindset of when money comes in, I pay all my bills and I spend my money, meaning at the end of the month I've got nothing left to save. What rich people do is they have a different mindset. When money comes in, the first thing they do is they save a chunk of it, put it to one side and invest it. And then they manage their expenses and costs of living to be within the remaining amount of money they have for the month. You might be thinking, well, that's all well and good, but how do I actually do it? One of the things I found really helpful was to have an income and expenses tracker. It helped me to target where I wanted to get to, what I could save and invest, and it also helped me to target reducing the big ticket monthly expenses so I could manage my budget to be within my means each month. The third habit is bad debt, and I mean that in 2 ways. The first point is using credit cards and buying things when you don't have the money. There can be loads of tempting times, whether it's sales in the shops, whether it's the latest fashion trend or the latest technology launch or phone upgrade. But unless I have the money in my bank, I don't buy it. 46% of households in the US have credit card debt, and the average interest rate on a credit card is 22%. Often people get trapped going month to month paying off their credit cards, and it's a difficult spiral to get out of. I'm not saying don't use credit cards, because there can be a lot of benefits in doing so, such as protection on your purchases. But the key is to only spend on credit if you have the money already to pay for the item. The second point is about over-leveraging yourself. If you take out the largest loan you can afford to buy the biggest house you can get, the problem is the monthly payments are so high on the mortgage, you'll struggle to save anything each month, and you end up paying massive amounts of interest straight to the bank. You get trapped in this cycle of earning to pay the mortgage, but with no savings to invest and grow your wealth. So try to pay off your high interest debt first, and then look at your debt to income ratio and make sure you're still able to save and invest on top of paying back any mortgages or loans that you have. I 100% get these 3 money habits are not easy to stop doing, as I've done all 3 of them. But if you can gradually make steps towards 1 or 2 of these at first, you'll make a difference to your financial stability in the long run, and also your ability to grow your wealth. I hope this video has been helpful. Feel free to leave any questions in the comments and give the video a like and a subscribe, and I'll see you on the next video.